Hello, this is NicTheMajestic, and today I'm going to talk to you about the volatility rainbow. So the volatility rainbow is a tool, an indicator, which allows you to understand volatility when you're trading. It's this thing down here. It flashes red when it gives the signal. So what is it actually doing? It looks at the VIX and the underlying security, and it looks at the correlation between the two. And the theory is if a stock is going up while volatility is increasing, while people are buying puts, it is a warning sign to get out of the market and potentially enter into a short position yourself. If you look down here, it has red, that's your warning signal. And it has a couple lines. So it has a yellow line, that is TLT, that is your boomer puts. People are going into puts, they're looking for protection, they're getting out of risk assets. You have blue, that is your Dow. You have red, that is your S&P 500, and you have purple, Qs or your NASDAQ. Green is your volatility of VIX. So you can see what's happening on the whole spectrum of volatility at once. Let's take a look at it in use. So here is 129. As you can see here, it's giving pretty good signals. It's calling the tops pretty well. Let's zoom out. I recommend using this on a larger time frame. Actually, it works okay when you're in the middle of a crash and you're trying to call the dead cats, but you need to understand that people are idiots and they will puke puts when they need them and they'll eat their calls when they shouldn't. So you want to be looking at larger time frames. Really good for calling the tops. So let's take a look at the 4 hour. So you can see on the 4 hour, we called the top, called this dip, called this dip. We did not call this dip. So this is a good example of what I'm talking about. People just puking, buying up a bunch of puts, thinking it's the end of the world, and it's not. So use it with other indicators, of course. Here, people probably not trusting the rally, people not trusting this bear flag. And the entire month of August is just people not trusting this death salute. Let's take a look at the daily. Again, people buying puts. People buying puts. It's good to also play with the coefficient. So, oops. So right now I have it at 10. 30 also works pretty good. So because we don't know what tranche or what the expiration is of some of these puts, it's good to play around with it. So you can see, as you go for a longer time period, you can see the most of the signal is actually at the tail end of this rally. So it gave a better signal. And here you can see in the August crash, we start thinking the signal right at the end. And then for the entire bear flag, people are buying puts, and then these idiots are buying puts at the bottom still. So don't be afraid to play with the coefficient. I use 10, 20, 30 pretty heavily, depending on my time frame. So this is the daily, so I use the 30. On the 5-minute chart, so you can see the 30 does not work. It works okay. It was kind of late here. So I use a slightly lower time frame. Anyways, that's about it. Enjoy.